Hey everyone, I just wanted to do a quick breakdown on my EURCAD sell that I had the other day. So basically I'm going to start on the daily chart and what I was looking at. So I noticed that price was moving in this overall ascending channel, created an ascending channel within it, impulsively broke. So essentially what I was looking for initially was for price to kind of hit this low of the initial correction. Once we started to kind of put in this overall descending channel, I kind of changed my bias a little bit, but I always kept this point in mind as the 90% rule. And as we kind of look at the daily, overall it's somewhat corrective. It's not as visible on the daily, it's a little bit visible on the lower time frame. So I was keeping this point in mind for a sell-off and ultimately potentially hitting that low for the 90% rule. So when I drop down to the 4-hour chart, this is when things start to get a little bit more clear. You'll notice the overall ascending channel, kind of another one right here. And what really kind of started to give me insight, similar to US dollar CAD, was this portion right here. An overall larger correction, really low momentum. Price is really struggling to break the highs. You got a couple of high tests here. A lot of retrace candles just showing a lot of rejection, a lot of orders changing hands at this point, so that gave me a good indication that a sell-off was likely to happen. So when I drop down to the hourly, you'll see that I have an ascending channel kind of framed up here, and I was keeping this high in mind as I noticed that price was basically tapping into it and then dropping, tapping, kind of getting everybody on the wrong side of the market, both up and down. So that was kind of my overall rationale to look for sells. The trade was ultimately taken on the 15 minutes. Let me just take that back here. So essentially what I was looking at was this overall impulse correction, looking for a continuation to the downside using the 15 minutes. So basically the way I managed this trade was initially price impulsed. We started to get a little bit of a retrace there. Once it kind of created that double bottom there, I said, okay, you know what, let's reduce risk. You know, being on the 15 minutes, anything can happen. So I moved my stop loss to what I would consider a break even, this 0.1%. My rationale behind that is a small amount of profit to cover commissions, spread, things like that. And you hit about 10 trades like this, you've made 1% on break even trade. So it's super powerful and helpful. So basically, as price continued to impulse downwards, I noticed we're starting to get a little bit of trouble pushing down. So what I wanted to do was essentially limit my risk a little bit more, and kind of put my stop loss in and around here to lock it about 1%. We're almost at 2%, so a little bit more aggressive approach than what most people do, but this is what I have done. And basically I was just factoring in this overall retrace, pullback, whatever you want to call it. Just seeing that prices, there's a lot of kind of groups of orders there. So price kind of just continued impulsing down. Once we seen this impulse candle, or retrace candle, sorry, kind of keeping my mind set on, okay, what do I do next? Impulse broke that again. So what I like to do then is just kind of put my stop loss in and around that area, factored in this whole 2% being in profit, hitting 3%. So I figured that was a good area to maximize the percentage, but also give the trade enough room to breathe here. Price just continued impulsing down. I like to kind of lock in profit where I can. So kind of following the same rationales up here, just kind of putting into about 3%, just again to lock in as much, being almost 5%, giving the trade enough room to breathe. And as price continued downwards, we got this large impulsive candle here. So that kind of gave me a little bit of insight. And again, once we kind of seen that, it was a matter of, all right, let's lock in just a little bit more profits, kind of keeping that high in mind, factoring in, let's go an even 4%, it's easier to manage. Again, kind of similar thing that we're seeing here on the 15-minute, and this is why the 15-minute can be incredibly powerful for trade management. So again, just kind of locked in based on this high here. And as price continued to trickle down, we started to get a little bit more of a slowdown in that regard, and ultimately starting to put in a little bit deeper of a correction. I was looking to scale in at this point for the most part. And it was in and around here I started to notice, okay, let's lock in just a little bit more, keep things tight, especially being the end of the New York session. Strange things can happen. We can pull right back into Asian session, especially it being EURCAD the pair we're trading. So keeping that in mind, that's why I kind of trailed things a little bit tighter. And then this is when we had that massive market events with Apple. The volatility that we've seen was ultimately taken out for 4.8%, a little bit of slippage there, but I think overall this trade was managed properly on my end. Definitely utilizing the 15-minute to manage this position, reducing risk as much as I could, and then just framing up the overall trade idea. I think that definitely helped. And yeah, so I hope you took some value from this. If you have any questions, feel free to message me. I can go through anything else that might not seem clear. So once again, thanks.